statistic. So that's going to make the monetary policy meeting minutes very difficult to trade. You could go in and potentially do a premium collection trade on it if you wanted to, but unless you're going to go back and manually pull all those stats, may not be worth it, but you need to be aware of it. You need to be aware that they're going to release their minutes from their last report. You need to be aware that the RBA assistant governor is going to be doing a speech, and these things could impact and lead to volatility. Also at 8 o'clock, you got the CB leading index coming out. None of these are really massive unless there's some big new revealing thing. There's no massive thing happening, but it still can add to some volatility in the Aussie dollar tonight. So just be aware of that, and then let's go ahead, let's scroll over. Let's look ahead on the week and see what we got that we might be able to put together and trade over here. And let's see. All right, so looking at Tuesday, pretty light day again. Again, not a whole lot going on. We are going to have, again, monetary policy statements coming out on the yen. It'll say tentative, and a little trick to this to help you out and get an idea of what. Okay, tentative is great, but I'd like to have a good idea of when you're actually going to put the thing out there. Is I go and I right-click, I open them all up, and I look at when they've come out. So like 11:50, 10:50, 11, 11:28, 11:20. And, I mean, you can even go back a year to sort of see the seasonality of the news release. You know, when does the, Bank of Japan decide that it's consistently a good time to, let you know what policy decisions they're making. And so you can go in here and look at them. And yearly, I've seen it's ranging anywhere from about 10:30 to about 12:30. So just knowing that that's there and having at least an idea of when it may be released, at least can give you an idea, hey, there may be some yen volatility when this policy statement comes out tomorrow evening. As far as some other reports coming out, they're all really medium, low impact. We got pound CPI is probably the one report that we want to focus on for tomorrow at 4:30. So looking at that report and seeing what the stats are, our high to lows, pound dollar actually looks best about 70% of the time, breaking 50 pips, 70 pip high to low. 70 pip high to low doesn't necessarily tell me, though, the whole story. So what I want to be able to do is I want to be able to go, okay, well, how far does it move between like 4:30 and 7 whenever the, the spreads expire in the morning? Can I do a straddle? Can I do an iron condor? I usually don't do strangles or butterflies on news because if it doesn't move, you lose everything. If it moves just one pip against you at the expiration there, you get hammered on it. Whereas the spreads, it's a lot more balanced, a lot better risk management control. So looking over the last 12 months on this pound CPI, what can we gather? I told you, the 70 pip high to low is the average over the last 2 years. But again, I care about release to high, release to low. So with that in mind, we moved up about 70 pips last time, but it closed at about 55. Okay, the one before that, we had about a 30 pip oscillation with about a 17 pip move. The one before that, about a 20 pip oscillation with a pretty much flat. The one before that, it actually flew it down 40 pips, but closed back at 5. Going on back and looking at December, then I can see that it ran down. It actually took its sweet little time. It actually did end up down 50 pips, but it took the entire time to get there. Looking over at November, about 32 pips of movement by the end, but it had about a 60 pip move. Back October of 2013, had a pretty big move. It actually, but it trended really slow, but it ended up being down about 70 pips on that one. Looking at September, we're going to pull up about a 20 pip move. Looking at August of last year, we're looking at about a 50 pip up move, but ends off about 20. We got the exact same thing in July of last year, but it only ends off like 5 pips from where it opened up at. We got a 70 pip move and a 50 pip, so 50, 70. I'm trying to count up how many of these are big. 3, 4, 5. Okay, so like 5 out of the 12 were 50 to 70 pip moves. Let's see, 1, 2, 3, 4, 5, 6. We have basically 7. Yeah, because out of the last 12 months. So with that in mind, going, this thing either like really breaks out or doesn't do squat. It's like, okay, well, so how does that help me? Okay, so I automatically know with having 5 of them that move that big, it's not a good idea to do an iron condor. Okay? So now my only other potential choice is a straddle. Because an iron condor, unless it was just a massive premium of 70 pips, that'd be a potential. Okay. But, if it's like 30 pips or something, you're just asking to lose like half the time. So unless I can get about, 60 to 70 pips on a combined iron condor, which means I buy the lower spread, I sell the upper spread, then I got to consider, is a straddle a viable option? And if so, at what point would I want to take profit? What cost would it be worth? And looking at the movements, I would say that the answer is really no. The other times that it does move, like out of those other 7 times, about 3 of those times you get about 50 pips. A couple of them you get 40 pips. The rest are just really small. So really, straddle's not viable. Iron condor is not viable, meaning I buy a lower spread and I sell an upper spread for the max profit to be about $70 on the trade. Somewhere between, I'd say, 55 and 70 would be your range. If I can get that, that could be an acceptable trade. That actually could work out over the course of a year, or at least has. So really got to look at that premium. To get that kind of premium, that means you're going to have to start earlier. You're not going to be able to hop in right before the trade. Most of us are not even going to be awake when that trade takes place or when that announcement comes out. So to do that, I got to go and I go, okay, well, how much does it impact me if I start early, right? What happens if I start at midnight when the report's going to come out at 4:30? And because that's very important if I think it's only going to be like 25 pips off, but if it moves 25 down and then it's 25 off from there, that impacts it. This trade is a hard trade. You will literally see it move up, back down. Let's see here. I'm going in, looking at every one of the reports, every one of the releases. And yeah, honestly, there's almost too much volatility to try to pull off an iron condor. So I would not be doing an iron condor. If you're going to enter it, now if you could do a 50 to 70 pip wide one like at 4 o'clock, awesome, go for it. If you're doing it earlier, then to look at actual movement from midnight to that point, does that help improve our numbers? Because a lot of times what will happen is you get on these trades, and for instance, I'm looking at February, and the thing only moved like 3 pips, but it moved down 70 pips from midnight. So just from the release, there wasn't a massive move. So now that I'm going back and I'm looking again at this as a potential straddle trade, then what I'm looking to go is what if I get in at midnight and I had till 7 a.m.? Could I do a straddle on this? And my answer, due to all the movement that we are consistently seeing between 12 and 4:30, obviously nothing is a for sure thing, but over time, most of the trades, I'd say really 10 out of 12 work best doing a straddle. If you can pull one off, you're probably going to be looking at about a 60 to 70 pip take profit. So if I'm going to, meaning 70 pips from where the market is, all right? So with that understanding, I need to go, okay, at 70 pips, where do I need to take profit? It doesn't matter what my spread cost, what my straddle cost. I need to get out if the market moves up or down 70 pips. Is that an acceptable thing for me? Like if it cost me $70, no, because I'd basically be at best break even at that point. So you'd be looking for either an iron condor, like right before, for about 55 to 70 pips, or meaning like a 4 a.m. entry for 7 a.m. expiration, or you'd be looking for a midnight entry of around 40 to 50 bucks at most, and taking profit if the market moves 70 pips from where it's at midnight, up or down. So setting your take profit order in there. And I actually, looking at all this, I'd prefer the straddle if the pricing is right, now that I see all the massive movement that happens previous to the report. All right, stay right there. We'll be right back after this and go through the rest of the week.
you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, will come on back here to the Diagnostic Trading Hour. All right, so we got our pound CPI plan, looking at a straddle enter at midnight, and we got a potential, other trade that we could do, looking at the iron condor if you were up and around at that time. So if you're not up and around 4 a.m., then the straddle's probably your only option. Set that one on, put it on, check out deviation levels to make sure you need to take profits at certain levels, you know where to take them. Like maybe 70 pips is 5 ticks above the deviation. I'm going to give up some dollars and take profit before it. Okay? Kind because I don't want it to have to bust through that. I've seen it too many times bounce right off of it. Let's see here. We had a couple earnings releases come out this morning. Got VOD from Vodafone come out, impacting the NASDAQ. Let's see, what else do we have going on that we can look at? We also have, let's see here. We got Home Depot. It's going to come out. It's in the Dow. That'll come out after the close at 4 o'clock. So we'll be when the Wire news release comes out. So be aware that could impact the NASDAQ today at the close. If you're trading right there at the close, you're going to want to make sure you're aware of that. Usually not the biggest mover in and of itself, but let's see here. Let me make sure that's right. So I'm pulling that up. I'm like, wait a minute. NASDAQ. The Dow. Yeah, the Dow. Could impact the Dow. I was like, that didn't mean it. Home Depot is not in the NASDAQ. Maybe that's what I said. Either way, Home Depot obviously can impact the Dow, and it has its earnings coming out today after, or is it tomorrow? I'm going to hop on their website. We're going to find out, because they were on a tentative list. They probably have updated to confirmed at this point. And go to earnings. Here we go. See if they're listing it on here or not. If they're not, then there are several ways to find it. One of the best ways that used to exist, but they've backed off, but was earnings.com. Yep, so they messed up their whole thing. There's also earningswhisper.com, can be pretty helpful. It's a useful little resource. So, and let's see here. Check out what we got going on. Home Depot, 520. Okay, confirmed and bumped up to before the open now. Okay, so it is going to be tomorrow, but it's going to be before the open. Okay? Let's see here. All right, so they changed that up. Traditionally, they've been at 4 o'clock. And so I need to update my plan on that. All right, so I'll go ahead and update that. But and let's see. So that'll happen before the open tomorrow. And what else do we have on the list for tomorrow morning? We'll be looking at VOD, so let's check out VOD. Let's see where they're at. They were also on a tentative list. So still not confirmed. Okay, yeah, they're just, let's see what we got. We'll see if we can check out VOD over here. Go to Yahoo, finance.yahoo, nice free source. Go to VOD, next earnings date, not available. All right, well, either they already released it and I missed it, or they haven't released it yet. So, all right, so good. Mark that one as not confirmed yet. Okay, so let's see here, but just try to go through and make sure I stay on top of those. Biggest reason for me, I'm not a big stock trader. I mean, I can trade stocks; it's not a problem, but I just don't like the leverage of it. I'd prefer, doing futures or options, or Nadex or Forex. But I want to know when those major highly weighted companies are having earnings releases, because that will in fact impact any index trades that I'm doing. And a lot of times futures traders can get so wrapped up in the NASDAQ or the S&P, they forget to look at Apple and they forget to look at Google. And not that you need to be all into, all the fundamental details. But watching a chart, if you're trading NASDAQ, actually watching Apple and Google and having those charts up as well is wise and prudent. Being aware of when they have those earnings releases, obviously a very prudent thing. So, things that definitely impact your trade are things that you should be looking at. All right, we'll be right back right after this break.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks. Yeah, it looks like they're going to do a preliminary results for the year ending. That's a little bit different. Preliminary results for year end 31st of March 2014. They are doing that on 2014. I appreciate that to Caleb for sending that on over to me. Not your normal, earnings release, but I guess maybe that's just how they do it. They like to do preliminary. Okay. So they still have it on there, but we don't really have a lot of detail from them still. Trying to see if I can open that up. Yeah, I'd have to get it all in Outlook and everything else. Anyway, so Vodafone looks like it still is on schedule for tomorrow based on their website. They just aren't giving a lot of details there. But be aware of it. I guess it is on the list, okay? All right, so that wraps up Monday. That wraps up Tuesday. Gets that done for us. And looking on over here, checking out what else we have that we might be able to do. I'm just trying to see if there's any other trades, but I think that's going to completely wrap up those days for us. Let's go ahead and check out the 21st. Looks like Cisco's on the list. So, go in and all that. They were on a unverified list back when I put the... What I do is I go every quarter, and I have a couple traders that help me with this. We put together the list of, all the major earnings that are coming out over the next quarter and what the scheduled time is and everything else. But right now, it's like their next one's actually not even scheduled till August 13th. So, probably already had it. So, on that list. And let's see here. Go ahead and go to, again, Finance Yahoo. Look at that. Pull up Cisco. Yeah, August 13th. So we got to bumping that one out to August at this point. And I just try to get as many of them as I can sort of in the lineup. And I'll bump that one out now to August and update that. Okay, cool. That one's done. And then we got oil inventory report. Okay, so that's tomorrow. Obviously, we got the oil inventories that you can take advantage of. And it can be a pretty cool trade to do. It's going to go in and look at what the implied volatility is built into the options, what's the expected move, because it happens at the same time every week. So knowing expected ranges for an hour or 2 hours or 2.5 hours can be very helpful when looking at the options, trying to decide whether or not to do a various types of trades. So we're going to have a few things coming out tomorrow. Or Wednesday. We'll probably have to go into this more in detail tomorrow. But we're going to have the Bank of Japan press conference. That's coming out. We were talking about that somewhere between 10:30 and... Oh, no, that was the monetary policy minutes. So we'll have to look at the press conference. Let's see here. So that press conference... Again, it's going to look like the last 5 or so releases. 2:30, 2:30, 3:30, 3:30. That's probably because of a time zone change. They don't change their time zone. Okay, they actually keep the same. They don't have the whole daylight savings stupid time zone change thing that we do. But ours does. So as ours changes, so if I go back and I start seeing 2s again, let's see here. And they have so many releases. Let's look at the same time last May. So we make sure we go to the exact same time zone here. Or time of year for our time zones. Yeah, 3:30. So, yeah, I guess it's going to be 2:30 to 3:30. You actually have an hour range there, 2:30 to 3:30 on that press conference. So expect some volatility at that point. Definitely on the yen. We're going to have the asset purchase facility votes. We're going to have the bank rate votes. So that's going to be coming out. That will have an impact on the pound. And we'll go into a little more detail for you tomorrow on the show. But that one's, again, that's a little bit harder trade to do as well. The better one to actually focus on is the retail sales. So we'll probably be looking more in detail at retail sales. We will anything to see if there, is a good potential setup. Retail sales, usually is one of those big numbers. Aussie, a lot of times it's a good trade. Pound, it can be a decent trade. But we'll, instead of just making the assumption, we'll dive in and we'll look at each release and see if we can find the best possible release. We just got to do so with the caution of the minutes will be coming on out. Let's see, FOMC member Dudley's going to be speaking. Let's see if it's going to be speaking at a regional economic outlook and labor market quarterly press briefing in New York. There will be audience questions and there will be press. So that actually could have a market impact. When it's just like some little private luncheon, not usually something to worry about. But when it's something like that, that actually could have, not a major impact, but you never know what somebody's going to open their mouth and say, especially when it's a press conference with open Q&A. Let's see. Yellen's going to be talking, but she's going to be talking like at a graduation ceremony. Okay? Wouldn't really concern myself with it. Another FOMC member, just like FOMC member day. This one will have questions. They'll be speaking, but it's not a press conference. Like this one will actually have, a quarterly press briefing involved. So really not too concerned about those. We will have the meeting minutes coming out. We'll pull it up. We'll talk about that. Not the same thing as the actual interest rates. But, something to be aware of, and that'll increase some implied volatility for sure. And then, let's see, Aussie inflation expectations. Again, not a number-based. When you don't have these numbers, when you don't have a forecast, it's very hard to trade the report. And but I'll come up with the stats on some of the stuff for you. We'll get it all together. And then some, other information over in China, New Zealand. Not a main concern there. Hopping on over to Thursday. German flash manufacturing PMI. That actually can be a decent trade, so we'll go into that. And we'll see if we see anything of real value there on the 22nd. But my guess is going to be a no. Second estimate GDP. It's GDP, which sounds big, but it's also second estimate, okay? It's not as big as the primary release. So it will impact the pound. Is it the one that you want to stake everything on like the other ones? No, it's not usually, unless there's some major revision, not usually a major impact report. We'll have core retail sales and retail sales coming out of Canada. So again, retail sales can be really a good number, especially depends on the time of year when those numbers really have larger impacts. Obviously, when you're getting all these numbers out from Christmas and stuff like that, they can have a lot bigger impact. How are sales going in November and December, sometimes even in January. But just seeing it's that whole, how is the last quarter going to finish for the retail market. So that can have a big impact on FX at that time of year. And then let's see, existing home sales. Not usually a big mover in and of itself, but still can be a great trade. And we'll look to see, most likely, I would be counting on an iron condor trade on that. You're talking usually, 10 to 20 pips is the average move on that trade. I think we have had two big moves, but they were massively different numbers than what you usually get. And there was other stuff happening at the same time. So existing themselves, we'll check that out for 10 a.m. And that'll wrap up Thursday. Walking into Friday, just getting you all set for the week, things to be aware of. We'll have IFO business climate in Germany. Not, I'll pull it up and we'll look at it. We'll see if there's anything that's, worth trading, or maybe even if it, who knows, maybe there's a great, euro overnight trade there. And if it's a flatter release, then that could be great for that. I haven't traded it that much, but I do have all the stats, so I got more and more of them coming online. And so as all those stats come in, we can see, hey, the last 12 months, had this trade been done consistently at this level, could it have been profitable? We'll walk into, let's see, core CPI happening over in Canada. That can also be a good trade to check out. And then we'll have the new home sales reports. So we had existing home sales on Thursday. We'll have new home sales on Friday, and see how the housing market is doing. Add that to the mix with Home Depot coming out this week. It is a big home week, okay? So it's at Home Depot and new home sales, existing home sales. A lot of housing reports. All right, so that gets you caught up on the news for the week. Puts all those different pieces together for you. And I got a trader that asked about, hedging. How does hedging work? And I have some training available on this. But the basic bottom line is, if you're trading on the Nadex platform, and maybe you're not trading on it, maybe you're just trading futures or forex. And let me see, I may be able to find this example that I actually was helping some traders out with the other day. And a trader came and they're like, man, these Nadex spreads are horrible. They're not priced right. Da-da-da. They just didn't understand how they work. And so I went in and I'm like, okay, let's look at this. Let's see if they're priced as badly as you think they are. And so I pulled up. This is on Friday. And so I went in and I pulled up a S&P 500 contract. and I went in, I pulled up the futures on the S&P 500, and I went and I got 2 strikes. So we got 1870 call, okay, and I have an 1870 floor spread, which basically works like a call from like the floor to the center and all that. Doesn't even matter how complex. It's really not that complex, but it's equivalent. I then looked at the cost. If I buy 1 spread for $1, or sorry, if I buy 1 E-mini call for $1, then I got to buy 50 of them, because on the S&P E-mini options, you get 50 options per contract. Okay, it's not like stocks where they're all 100. Different futures have different amounts, so you got to do 50 of them. So it's gonna be $50. What if I went over and I did that over on Nadex? Well, it cost me $1. Okay, it actually cost me 1.0 on the trade, so it cost me $10. So it's $10, but I got to do 5 to equalize it. So that way I'm equaling, $50 a point, because if I do 1 contract, a spread will make or lose up to $10 in a 1-point move on the S&P. So in order to make sure I'm making that or losing $50 a point, then I'd want to do 5 spreads. So also priced exactly the same at $50. Okay? So that right there, obviously is very helpful just to understand how it works, put all the pieces together. And, you can add, there's a lot of different little pieces you can see in here, but the first one I want you to see is the simple fact that they cost the same amount of money. They have the same amount of risk. Now, this is looking at Friday to a Friday. So same market, same strike, same expiration time. Okay? And then to look at the bid-ask spread on the trade, it's $1 by 85 cents. That's $7.50 of bid-ask spread. This one over here, okay, is basically 50 cents. So if I go in and I did a calculator on that, and what I'm looking at is I'm looking at $1 to buy it, 85 cents to sell it. That's 15 cents a contract. Okay? I got to do 50 contracts per option, or 50 cents an option, 15 cents an option. If I have to do 50 options, that's $7.50. So, if I go over and I look at, 1871 minus 1870.5, that's 0.5, that's $5. So it's very comparable in the bid-ask spread itself. But the main thing is just the capped risk on it. Okay? Once you get that down, then you're sort of free, able to, whatever, go in and go, how would I hedge with this? What you're going to do is you're actually going to find the price that you bought or sold the future at, and then you're going to hedge it off with a spread, potentially. And what you want to look at, what is your risk? When you're doing the trade, where would your trailing stop? What would your stop loss be? And can I put this thing on for a similar risk or better, but now eliminate the need to have to get out should the market go against me? Without having to, so that way it could go against me by, let's say I have a stop 2 points away. Well, what if it moves up 2.5 points and then goes right back in my favor, and now I can't catch that big run? So using a spread, you want to do that. And you think about, basically, these are options for day traders, is one of the best ways to look at them. And so you could go in and go, well, what if I was going to have a 3-point stop on the Russell? I went short the Russell, and I'm trailing this thing. I'm trying to give it room to breathe and move. What could I do? So you could go in, and you got a couple choices on what you want to do. So if I pull this up over here, and if you had a few point stop, so just sort of trailing up here, like at 11.12 right now, I could choose to go in and buy these spreads. And I'm at a point now where I should be, depending on where you got in, but if you got in right there, you could go in and decide to buy those spreads and not have to worry about a stop loss. Now, that's only going to give you the 3 o'clock, so you may decide it's not worth the risk or the cost, but you just have to compare the spreads that are available. And to really know what the real risk is, it's not $38. I'll tell you what the formula is to know what the real risk is when we get back after this break.
take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, going back here to the Diagnostic Trading Hour. So I was looking through and going, okay, what's the best possible trade that I could do if I was going to go over? And basically trying to find some decent spreads. And the way to pull the trade off, one is I don't want only 5 minutes of protection there. Okay? So I'm going to go up here and I'm going to say, give me at least, say 30 minutes or whatever on a trade. So when I get a trade, I want to have at least a little time on there, get that out of the way. And then I don't want to show like every single contract. So here's how I use the scanner. I go in, I look down, I'm like, okay, I don't want to see all this mess. I'm wanting to sell the Russell futures. So I had to sell right up here, okay? So market hadn't moved a lot, but had to sell at 1108. So, understanding that I have that sell there, then I can go over here and go, okay, well, if I want to hedge it off, that means I'm going to buy. I'm going to go the opposite direction because the spread has capped risk, okay? And so by doing that, by clicking buy, I get rid of all the sells. That lowered it a lot. Now I can go, you know what, I want to go ahead and put that at a 1-to-1 risk-reward ratio, basically just because I want to be able to have a low risk and a big hedge when I do this trade. So by doing that, that cuts about over half of them out of the way for me. And then the next steps, I'm going to say, you know what, I want to make sure I have at least 30 minutes to expiration. I don't want these 5-minute ones on there. So down here, that knocks out all those. So I don't have to figure out what I want. I just see what there is, and I go, what do I not want? And that's what the filter's for. I don't want things that expire in 5 minutes. I don't want things that have more than $100 risk. You know, $100 may even be too much. I may say, you know, if I'm hedging, you know, I don't want anything that has, you know, more than $50 risk. And so I can go over here and just type 50 in there. And that automatically drop everything that had more than 50. And now it's like, okay, well, this is the only spread for the current hour, the upcoming hour, that I can hedge with. Now, there'll be another one here in 4 minutes that might be a better choice for me. But as of what's available right now, this is it. Okay? And so I could choose, if I wanted to buy that spread. Now, depending upon what price I got in at on both sides would actually be what my actual risk would be. How do I calculate what my actual risk is? Well, the formula is really simple. It takes a minute to wrap your head around, but like I said, the formula itself, very, very simple. It's the difference where you buy one and you sell the other. Okay? The difference, again, where you buy one and you sell the other. So right now, we just got, you know, let's just say you decided at this moment, I'm going to go short the Russell. Like right now. And you went in, you sold at 1109.3. And you bought the other one at 1110.9. And I'll just take a screenshot because otherwise this thing's going to keep moving around on us. Makes it really hard to do math when your numbers are always changing. All right, so right here, I'm buying. Let's say if I went in, sold the Russell. Let's say if I sold it at 1109.3, but I bought, okay, this is the bid and the offer. I bought at 1110.9. Now, what is my risk on the trade? And I'll show you this on a risk-reward graph as well. But basically, just so you know the formula, it's 1109.3 minus 1110.9. So it's 1.6. It's $160. Okay, that is my risk on the trade. How is that possible? How does that work? So only $160, and $160 is really good because that's only a 1.6 move on the Russell. That's an awesome risk reward. And it gets even better than that because not only is that my risk reward, but that doesn't mean I have to get out of the trade if I'm down $160. It can actually go all the way up to the ceiling of that spread, which is all the way up to 11.15 in that case. I'd still only be down $160. So as of expiration there. So it's very, very simple. You just calculate the difference. And we'll build on this throughout the week, and I'll help you understand these hedges more and more. But it's, in my opinion, the best way to trade futures is hedging them with Nadex. All right, y'all have a great day. I'll see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.